Guys, do you know some of the really bad and also some of the good side of FHA loans? Let's find out good and bad sides of conventional versus FHA loans. Both FHA and conventionals are very well-known loans in the market right now and available to borrowers. The main difference, let's discuss. FHA loans are issued by Federal Housing Administration, and as a result, it has easier qualification requirements than conventional loans. Under FHA loans, your credit score can be as low as 580. Can you believe it? As low as 580, they will allow you an FHA loan and still get the loan. But with conventional loans, needs higher credit score, typically around 660, but in certain scenarios it can go lower also. Additionally, FHA loans requires a minimum down payment of 3.5% for the purchase price of 1 to 4 families only for primary houses. But on the other hand, conventional loans need minimum 15% for 2 family. If you have less than 15%, you're not going to get conventional loan for a 2 family house. You must have to go FHA. So for conventional, minimum down payment on 2 family is 15% and over 20% for 3 to 4 families. Typically, they need around 25% down payment for conventional loans between 3 to 4 families. So keep that in mind. But for 1 family on a conventional loan, you can go as low as 3% down. Now, let's talk about mortgage insurance. The FHA loans require mortgage insurance premium, also called MIP, regardless of the amount of the down payment. No matter how much you put down, you still get to buy, you still get to pay your monthly MIP. Conventional loans may also require private mortgage insurance, also called PMI, but if the down payment is less than 20%, then you must have to pay PMI, or you can buy down at the closing table as a one-time lump sum. But that PMI can be removed. If you have 20% equity in the property at least, you can do an appraisal, send it to the bank, or bank can do a BPO, and they can take off your PMI. Also, borrower can buy down the PMI at the closing table by paying one lump sum so that they do not have to pay monthly PMI under conventional. But FHA, there is no way to get rid of the MIP for a long time until you refinance the loan to conventional. What about loan limits under both kind of loans? Let's talk about it. FHA loans have maximum loan limits parameter, and you cannot get loans over that limit. And this limit is different and varies by location, by county, and can change each year. The loan limits are set by the Federal Housing Administration and are designed to ensure that the loans are available to low and moderate income borrowers to helping them to be a homeowner. So that's why they have these limits and all those stuff between county to county. On the other hand, conventional loans may have higher loan limits depending on the borrower's creditworthiness and the size of the down payment. Now, how about interest rate? Interest rate on FHA loans are typically little lower than those of conventional loans because the FHA insures the loan, so it reduces the risk for lenders, which is bank, and allows them to offer lower interest rate to borrowers. On the other hand, the interest rate on conventional loans may be lower for borrowers with excellent credit scores and the amount of the down payment. So it goes in case-by-case situation. Now let's talk about property types. FHA loans can be used to purchase a variety of property types, including single-family homes, multi-unit properties up to 4 units, condos, and manufactured homes. Conventional loans can also be used to purchase these type of properties, but may have additional restrictions or requirements for certain types of properties. So here is the summary on both loans. FHA loans are typically easier to qualify for and have lower down payment requirements and may have lower interest rate than conventional loans. However, FHA loans require mortgage insurance premium throughout the most part of the life of the cycle of the loan. So it's a little bit too much money putting out every month because of the MIP. So let's say you have only 5% down payment and you want to buy a 2 to 4 family house. In that case, your only option is FHA because conventional allows minimum 15% for 2 family and 25% down for 3 to 4 family. Some cases 20%, but usually 3 to 4 family they want 25% down. So your only option will be FHA if you have low down payment. Also, let's say if you have a bad credit score which is around 600 FICO, then your only option will be FHA because conventional needs much higher credit score. Conventional loan may have higher credit score requirements, higher down payment requirements, and higher interest rates, but may offer more flexibility in terms of loan amounts and property types. Lastly, there are few really bad things related to FHA that you as a new homeowner or anybody who is in the market to buy a house must know. Even the home seller must need to know. What are the bad things of FHA? Let's talk about it. You have to pay extra closing costs, almost 1.75% as MIP fees to HUD, Housing and Urban Development, on an FHA loan. So, in a typical New York City loan, let's say $700,000 loan amount, you got to pay extra $12,000 as a closing cost extra. So on the closing table, your closing cost goes up almost $12,000. Plus, every year with your mortgage payment, you get to pay another monthly MIP, which comes out to around $4,000 a year. So there's $12,000 there, $4,000 here, and that's not it. there's an additional, in addition to that of the another 1.75% that adds to the loan amount. So for example, you are buying the property for 800,000, you are putting down 100,000, so your loan amount is supposed to be simple math, 800,000 minus 100,000, which is 700,000. But no, in FHA it increased by another 1.75%, which is comes out to almost over $712,000. So instead of your loan is 700,000, under FHA it becomes 712,000 you get to pay. So that's another way of killing you under FHA. So you lose big time on all these three different types in FHA. So you have to be careful. If you are capable of buying under conventional, then you should be avoid FHA. But if you don't have no option, then you must have to go FHA. But if you do not have enough money to put down, and if you do not have good credit, then FHA is a great product to own a home. FHA allows you only for primary houses, whereas conventional loans can be both primary and investment properties. I hope this should give you enough understanding, friends, which loan you should go for. But if you have any further questions, I am always here. Let's connect. If you have any question, I'm always here. I can clarify things. Remember, I'm your local New York City real estate and mortgage expert in Queens, Bronx, and Long Island area. Always here for the betterment of you, so that you can be a smart home shopper or a smart home seller. Until my next video, friend, stay well.